Good morning. It is Saturday, July 12th, 2025, and this is Mr. Not Advice, my weekend update. Hope you all had a great week. As always, this is for entertainment purposes only and should not be construed as advice in any way, shape, or form. So, pretty interesting week. Slow. It felt slow. By the time we got to Thursday, I was pretty tired. We had some macro data that came out that helped to lift some of the what they call the Goldman Sachs economic surprise index. So that helped to put a little bit under the market, but looking at the week in the rearview mirror, it was pretty active on the tariff front. With and then today, just as I do this, we had Trump sending out letters to Mexico for 35% tariff, but um, as it stands, prior to today, we had an extension of the tariffs from July 9th to out to August 1st. Asia is going to get a 25 to 40% tariff rate, and that'll start on August 1st, and that's going to include Japan, Korea, and Indonesia. Then we have a 50% tariff on copper imports. And as well, we have both Canada and Mexico now. He announced it Thursday night, but both Canada and Mexico now are going to be hit with 35% tariff. So, you know, if we hadn't had the most recent history market performance or market activity, I would look at this and say, oh my gosh, Monday's going to open down red. But as you and I both know, as we all know, anything can happen before the futures market open, let alone the cash market on Monday. So, um, after 8 consecutive weeks of net buying, hedge funds were modest net sellers for U.S. equities for the second week, and single stock names saw degrossing activity or selling for the first time in nearly 5 months. What's interesting to me is the Mag 7 stocks did rally 1% on the week, while 493, the other S&P 500 right here, okay, the other S&P 500 stocks, well, they went down a percent. So not a broad-based rally yet, but that typically happens on a breakout, which is what we're getting to all-time highs. Continuing forward, we had momentum stocks suffered again their third week in a row. It's actually their third loss in a row, 6 of the last 7 weeks. Um, with momentum, the shorts getting just smashed. Momentum shorts getting smashed and momentum longs getting smashed. So momentum names obviously are getting hit. Looking at the risk backdrop since Liberation Day, the most shorted stocks have Goldman's basket of most shorted stocks have almost reached a new high. But again, I'm not overly concerned as I'm looking at the overall depth of the market. It's a messy chart by Goldman, but what it shows, which you can't see, is the long end of the yield right up here. Um, the long end of the all ends were higher across the curve. Is which is important because obviously the bond market is bigger than the equity market. So we look for when the bond market the rates get at extremes. We're not there yet, but one thing you do want to take a note of is the 2 and 30 year, where they call it the yield curve, and it's the difference between the 2 year and the 30 year. It did steepen on the week, but again, we're not. Yeah, we're at highs, but nothing near where the bond market is signaling it's breaking down. Bitcoin exploded higher. That's funny because I put out last week into the Discord. I think it was Friday. I said my one of my predictions. I have a channel in the Discord for predictions I make, and one of the predictions I made last Friday is that this past weekend would open up a new all-time high in Bitcoin. I was 3 days late. However, here we are, busting out Bitcoin. Big move up. I don't know if we'll see 100,000 for a while. In addition, this shows here huge inflows into ETFs, primarily. If you look, these are all the Bitcoin ETFs. And as not to be outdone, you can take a look at global M2 liquidity, which is green, and Bitcoin price, which is blue. As I've been saying for weeks to my members, Every morning I tell them the same thing. Bitcoin is going to lead the market today. Bitcoin's going to leave the market. They asked me why. I said, well, we've had over 40 interest rate cuts globally, which is phantom, it's phantom quantitative easing. Okay. So where is that money going? It's going into Bitcoin. Look, this is all the way back to 2023. I'd say M2 money supply, the green, is a pretty good indicator where Bitcoin wants to go. Okay. So also, Ethereum, we caught the massive breakout. I'm going to show you all how I did that later. It's not magic, a little bit of luck, but yeah, Ethereum is breaking out of this support level right here, and our next resistance on Ethereum is way up here, over 3,000, almost at 3,000, over 3,000, 3,200. Um, Additionally, if we look at the Ethereum Bitcoin ratio, we're starting to move back up again. It's got quite a bit to go, by the way. Ethereum has really underperformed Bitcoin since the election. This chart is oil, and whoops, I'm so sorry. This chart is gold, and makes a little bit of sense that gold, while it was up for the third day in a row, it is finding constant support at this red line, which is the 50-day moving average. I don't know really how we can make it any easier. It's telling us where that price level is. Support. Silver surged above $38 yesterday. That is the highest it's been since September 2011. Holy crap. That's amazing. Silver has been notably outperforming gold in the recent weeks. And it is actually amazing that silver and gold and Bitcoin are moving up in unison. Not every day. Copper, as I want to remind you, that copper I was taught was the canary in the gold mine, which means it's an early warning signal of both slowing industrial activity in a country as well as rising. And Trump putting tariffs on that's going to be a front end slowdown. It will put a crimp in supply, but over the long term, it should help greatly reduce the expenses. For because copper is at the base, it's like lumber. It's at the base of most construction projects. So yeah, this is the copper chart just exploding higher. Now, if we want to look at where we are, this is where we are. Okay, you say, oh, that's a nice chart, but what the hell does that mean? Here's what it means. Okay. Yesterday, Friday capped off one of the greatest 3-month rallies in history. We are up more than 25%. Right? There's only 5 other times in history this has happened. And guess what? After, okay, it happens 100% of the time. Yes, 100% of the time, the market goes higher right here. 22% a year later on average. Okay. And it's never been lower right here. Average 1 month later, 3 months later, 6 months and 12. Yes. According to this, statistically, getting short here is a very stupid idea. So I remain long tactically. Let's look at the overall market. And then we're going to get into the tariff situation. Let me just put it this way. Trump is going to put out, or he's going to do a statement, a policy statement about Putin, not Russia, Putin on Monday. Obviously, I guess in their trifecta love triangle, Zelensky's back in the in crowd, so he and Trump are buddies again, and Putin's out now. So they're worse than teenage girls. Anyway, and it's a shame because they have the power to destroy the world at their fingertips. But we will have that weighing against the market on Monday. In addition, we have all these tariff letters going out. However, any short-term pullback to me, I still think that Trump could thread the needle. We're seeing it in record tariff dollars, our budget surplus, record tariff dollars coming in. We're seeing it that 100% of jobs that have been created since he was elected or since the beginning of the year have been domestic citizens. This is all good. See, that's when the money stays in the economy. Okay. So I think that while we could have a rocky couple days, ultimately, I think the market's headed higher. And I did I put in my prediction room that I think we're going to could rally through the end of the year. It all depends on what's going on with interest rates. Now, we had the head of Pulte Homes, Bill Pulte, come out and say he's the head of the housing administration, that he put out a memo saying that Jay Powell was considering resigning. I think that's bullshit. I don't think he is considering resigning. I think that's Pulte, probably at the behest of Trump, trying to put it out there and start this little rumor mill going. I don't think Jay Powell goes anywhere. I don't think he's doing a good job. I think he's politicized it, but you play by the rules. So we got to put up with the guy until he is out of there or Trump names a successor and the market moves beyond Jay Powell. But do we need interest rate cuts? Look, right now, looking at where the economy is, we could, depending on the type of stimulus that comes in, the market certainly, or the economy could take off. There's so many different variables, and economists like to look at them on paper, but they don't understand how they operate in the real world. Sorry if I offend you, but this is what my father would say to me, much to the chagrin of my mother, who was a teacher, a longtime teacher. And I don't find this truthful except for economists and finance professors. The statement I always heard was those who can do and those who can't teach. And that's what I pretty much think of economists. They don't live in the real world, they live in their models. And to me, that's somewhat, you can find guidance from it, but when there are events that are going on that happen to be outside of those models, economists their brains break down. Excuse me. So let's get to the markets. S&P 500 today, or Friday. Looking at, let's roll in here. All right, so stuck in this channel, right? 1, 2, 3, 4, 5, 6. So we effectively closed where we opened. I mean, this was a lot of movement for not a lot of hell of what do you call it? A lot of activity for not a lot of price action. So hold on here. Let me remove these studies. There we go. Looking at the QQQs. Once again, same thing. Here was our Monday open, Monday, Tuesday, Wednesday, Thursday, Friday. We opened on Monday at 553.52. We closed on Friday at 554.20. A very, very minor, right? New weekly close high. We're stuck in this channel until we break out of here. I'm not really concerned. I believe, or I teach, that when there is a temporary change in trend will then revert on a high probability basis back to the original trend. So what do I see? I see a breakout here, move sideways, breakout, move sideways, breakout, move sideways. Yeah, I think we'll get another breakout. Right? Let's look at some current positions that I happen to be in. I'm also going to go over the trades that I happen to close this week. So, current position, let's look at Tesla. First of all, Tesla, nice strong move off this bottom. So, I would say this area from 273 all the way up to 288, that whole area right now is supportive. Okay. So, if I'm looking at price coming back down, it's going to take an outlier event, news or whatever. And we've had plenty of news this week. Or it's going to take a black swan event or the overall market to push this back down. I'm not interested in getting into Tesla until I get above this 369 level, and you can see why. Right? There we are. So next one, let's take a look at SMTC. We got into SMTC, and I'm currently down 13% on it. But here is our break. So here's a lesson. We took this 46 break level right here. Price discovery ended. It comes down, comes up. We got in on this candle break. So this was the confirmation right here through that break level. This is the candle we got in on. This was one of the morning where we took this trade, and there were 5 trades, and every single one of them, literally like 2 minutes after, it went hard against us. We finished great for the day, but it went hard against us. What do I see here? Well, if I zoom out, look what I got. I'm into a big time gap. So I expect the gap to close. Then I get up into this candle. I call this blue sky. We'll see if there's momentum to do that. But right now, what do I see? A flag and a pennant, right? See the pennant? So I I'll raise my stop on this to the low of Friday. I always will be trailing my stop up. Looking at roadblocks, which I am not in, I am waiting for this level to break up here. Really, that 108.10. Yep, 108.10. I am in PPTA. I get into that on Friday morning. And let's take a look. I'm actually going to come back to PPTA because I want to go over what my entry was. I am in PCT. Let's see, up 11%. I will let's see, I'll put my stop here right below this candle low, which will be right below 15 bucks. So I'll be at 14.99 on my stop. Let's actually do that. Actually, let's raise this up. You notice I raise my stops up doing it this way because what I'm trying to do is use the momentum of the price and where price discovery ended each day as my technical stop area. Oscar got slammed, but I'm in a lotto on that. I'm down 85% to either find support or I get wiped out. No big deal, like 1%. Mara, we were in for 2 days and scaled already. On my remaining position, I'm up 27%. We caught a beautiful break on Mara right here. All right. Here was the break level, the top of this candle, 1830 breaks. We got in this day again where we got our face ripped off at the open and finished nicely. Now I'll raise my stop to the low here, 1897. Beautiful. And like I said, we've already gotten a scale off on this. ETH, I will come back to how we caught this entry, but obviously I'm raising my stop all the way up to here. Yes? All right. Right to here. We have also scaled on AETH on the first scale. I got 64%. I remain up 65% in the remaining position. EOSE weak, but end of the day, we've had 2 days in a row where we've had buying. I think we're headed down to this support level at 418. Okay. I'm not really worried about EOSE as long as, and I've been through this multiple times, people who are losing their mind over not getting PR or any of that need to chill out. Okay. I just simply don't understand what it accomplishes to be constantly bitching about that we don't have PR. We have a tremendous amount of soft data that we continue to see, whether it's new job postings, whether it's felt deliveries. You know, do I think the president's going to be mentioning EOSE on Monday? I don't know. Maybe. Who knows? But what I do know is that everything that I've seen over the last 4 months, no, since all the way back since last September when I was out there saying the DOE loan is going to get done. Okay. October. I said last year the DOE loan is done. I got a lot of grief. Now it's not, you know what you're talking about. DOE got done. Right. And I said if we get 2 news announcements, the stock's going to spike. We got 3. They spiked it even harder. Look, I'm not 100% right all the time. All I'm telling you is based on the available data that we have today, there is nothing that has changed. I'm not getting tired of people because I don't really respond to people on Twitter, but you know, for those that take the time to listen to me and don't think I'm a complete idiot, um, you know, maybe take a look and step back and realize that if you are really looking at this company as being something that's possibly a 3, 4, 5, whatever X, do you honestly think that there's going to be a rhythm of news and announcements every 2 weeks? No, no. So what I've told my members with it is a company's stock and a company at this stage, what they need to show Wall Street is rhythm. So they need to hit a cadence, right? And it's like the option Greek gamma, right? So gamma is the rate of change of price, how fast prices change, the slope. Well, what Wall Street needs to see is that the slope, the acceleration of earnings and revenues and contracts and MOUs being converted to contracts, that's starting to quicken, right? And once they see that at some point, and I don't know how long it will take, it will happen fairly quickly. But once they see that, that's where we enter that hockey stick potential. But we're not there yet. We don't have a rhythm. In fact, over the last 60 days, we've had negative rhythm, negative cadence. So if you look at, I mean, let's think about this. When they came out and they talked about the CFO leaving, you know, we tagged that price this past week and it weakened. So no, we are stuck right now. But my point was with that comment was we had recovered a tremendous amount of the downfall, 50% retrace in a very short period of time. Do you all understand? Usually when a company loses a CFO, the stock doesn't rebound. It certainly doesn't do within a week. Okay. So again, I would encourage you, if you are feeling all this anxiety and you're feeding into it on FinTwit, take a break, man or ma'am, and step away. Anyway, I am no less confident or positive on EOSE than I was last week. The price is right now, the price is immaterial to me because I have no new data. There's a difference between blindly believing the story compared to looking at what for the current data, doing a best efforts probability calculation or analysis on where you think the company's headed, position sizing correctly, obeying your stops. That's where I'm at. So that's why I have no sweat about it. I'm at my lowest point right now on EOSE than I've been in, I'd say over a year right now. I only have current allocation in EOSC, only 11%. So yeah, I'd love to get higher. I still have a bunch of leaps. ENVX, great strong week. Look, 1, 2, 3 days. It's banging its head here. Yeah. All right. We made money on ENVX this week. We made over 100%. I had a member make over 240% in like 2 weeks in these. So do I think that they're going to come out with a big contract? I don't know. Here, let me remind you of something. October of 2023, I started talking about ENVX. And I said at that point, I turned or coined a couple, or I mentioned a couple words. I said that Raj liked to do word salad. Well, that turned out to be true. I also said that I would wait until I committed a large sum of money, a large allocation to ENVX. This is now remember, this is almost 2 years ago. What were my two conditions? When they name a customer and a sizable order. Well, I am still waiting. So, and the comment was, well, you may have to buy it above $20 then. Good. I'll buy it above 20. I'll buy ENVX above 20 if that means they have proven their entire business model. Okay. From technology innovation to development to mass production, delivery, and sales. I'll do it. I'll be more than happy to pay $20 at that point. So, do I think this is going to stick? Look, I think there is an expectation that there is news coming. I don't know what it is. Heck, I even have expectation that news is coming. Okay. So, I'm looking for another to get in again to get this breakout. I got in and got this first breakout right here. Now I'm going to wait to get the second one and keep peeling out money on it. So, looking at ARKK, we are in that. We have not scaled. We were positive, now we're negative. This is crazy cat wood. And our stop will remain, excuse me. This was the break level right here we took. This is the candle that broke. You see this 7150 level. That's what broke. Okay. It breaks. That's our confirmation we get on the next day. Boom. Great day. We will have as our stop the low 7212, which was the low of Thursday. So I want to go back and for the week, just as an idea, I want to go back through some of the trades, especially this Ethereum trade. So we entered Ethereum on Thursday, and I'd like to go back to what got us in first. We got in on this break. We happen to be in here and here, but on 1 second here. So let's take a look at a couple of the trades that we entered this week. First of all, let me go through what we closed this week. So looking at 7/7, we closed ENVX. This was my runners for 139% in 10 days. I closed GGLL. That was a runner for 18.5 and 13%. I got stopped out of Galaxy for minus 50% in 8 days. Stopped out of VNet minus 15% in 1 day. VSAT, I took a stop on the runners for plus 22% in 14 days. Qubits, I took a stop on my runners. That means I'd already made money on my scale. Okay. I took a stop on my runners at plus 15% in 9 days. TNA, which is the Russell 2000, I took a stop on my runners. I'd already sold it up here for 35. I took a stop for plus 17% in 7 days. PBI, I took a stop in 2 days for minus 46. EOSE, I did get stopped out on my August calls, okay, for minus 5%. That was a 23-day hold, very long. Mara, I scaled out for plus 48 in 2 days. ALGM, I closed my runner for plus 71% in 14 days. And Ethereum, I closed a runner or a scale for 63% in 2 days. So that's the model portfolio. So on that, what you'll see is the position size is small because what I do is I trade real money on the model size portfolio also in addition to my own. So that's a 15,000. Well, it's higher now. I started a little over a month ago. I think it's close to 17 now. But I want to show a entry that we took on Friday. So if I look at the 5-minute candle here, and this is, I often, what's important to understand with what I do, I use, it's fractals. And I had C-Dub, one of our Fight Club members, point this out, that what I'm doing is actually fractals, meaning the setups I use on my daily chart are the same exact setups I use on my 5-minute chart for entries. So I use the 5-minute chart for entries every morning because my philosophy is, hey, if there was a trend the night before and it was in my favor in my thesis direction, that should continue at least for the very next morning. When it doesn't, that's a red flag. So here's what happens. This is, let me zoom in here for y'all. So this is right here on the left-hand side of the screen. This big green candle is Friday's open. Okay. So Friday's open, big green candle shoots to the top. Oh, and important, what I do every morning with my Fight Club and VIP members is I will tell them beforehand all the trades, but include in that what our entry levels are, meaning where is the price where I don't want to do this trade. Now, where we started out the morning was the entry level is at 1458. Okay. So here we go. Market opens. Next candle immediately goes down and below my entry level. I am what I would say no longer valid because I'm not above it. I was looking long. Market next 5-minute candle goes lower. I'm still not interested. Get this little spike up here. Not interested. Okay. I can't be interested no matter what the direction is until we get back above this level. First of all. So he keeps going down here. We keep going down. We keep going down, and it keeps going. So at this point, I'm not thinking we're going to get a shot because normally I am not going to sit here and monitor a trade. Okay, throughout the day, my rule is after the first hour of the open, if I wasn't able to enter my trade, I don't get in the trade. So we watch this price start moving back up, and what I noticed, I had already drawn for my members this 1437 line on the way down because I saw when we came down on this big red candle, here was your 50% retrace attempt. And then it did it constantly for over a half an hour. So this showed me that this price level right here, price, as I say, was banging its head against there. So I want to remember that because I know the bots will. So what happens? I say that's my entry level, 1437. Okay. And I did. I called an audible because we have been trying to get long this stock from an option standpoint. Here it goes. It breaks through. But what do I need? I need a close above my break level, my entry level. I didn't get it here. I got it here. We went in. Right here is where we went in. I bought them for $1.35. Okay, my options. And then it just took off, right? But where did we stop? Well, it makes sense we stop right up here in this 1490-ish area, 15. So because that was his previous high on the 5-minute candle. If you drill out on it, now let me comment on this. Understand that the way I read the charts on the 5-minute is the same exact way I do it on the daily. So let's review. This was the opening candle. This happened. Remember, it went below my 1458 level that I wanted to buy at. Boom, I'm off the trade. Then this happened, but I'm monitoring this because I wanted to get into this company, this option contract. It was a very attractive trade. This, reading the chart, if this was a daily chart, I would be looking for a break of this day's high to get in, a close above it. Doesn't matter, it's a 5 minute. That's exactly what I did. Okay. I waited, got in. Now you may look at that and say, well, you got lucky. Okay. Maybe I did. But I seem to get lucky a lot because the way I use this methodology for entries. I use it when I swing trade. I use it for longer term trading. And if I'm lucky, that I've been lucky for, oh, I don't know, 25 months to the tune of 369%. So no, it's not luck. It's called statistical probability. Could that performance end? Yeah, I've had years where I didn't do as well. But my point is, at least with what I'm doing and what I'm trying to teach people is there's math behind it, there's probability behind it. And ultimately, you don't, as a trader with my methodology, you don't really get input until 2/3 of the analysis is done. So this was an example of an entry and how I use entries. But again, I'm still using price levels and resistance, right? This 1437 level became my resistance on the 5 minute chart yesterday morning. When we came up and tested it again, I was willing to take a chance there. Why? Because I'm getting in 20 cents lower than my original level. I get in my option contract. I think I get in 20 cents lower on that. So my stop right off the bat is going to be tighter. I mean, it's just a great setup. And if I drill out on the daily chart, let's take a look. What happened yesterday? Well, that was my break level. We closed in the gap. Look at that massive gap. But what did we get? 50% retrace. I measured it. This retrace was almost exactly 50%. It was off by 2 pennies. Okay. So 50% retrace. What do I say? When there's a pause and trend, it'll either move sideways, but when it wants to reestablish, its first choice is back in trend. Why? It's financial physics, literally. Okay. I mean, there's the mechanical function behind this, what's going on due to the bots and algos. All right. So that's one of my setups, how I take it from the daily. I showed you on a couple of trades how I did my entries. And it's not about luck. Let me tell you the final thing. Why we all of a sudden over the last 8 months or 9 weeks have been just sort of killing it is because we finally have repetition. We have repetitions at the plate like a baseball player. We're getting enough swings. So we're constantly opening and closing positions. It's been wicked fun and wicked busy. But I will tell you that um, this type of market action and this type of performance is totally normal. We did this last fall. We had this type of performance. So, no performance, no returns are ever guaranteed, ever, ever. But at some point, you have to decide if you're going to continue to do things the way you've been doing them, right? Definition of insanity, and expecting a different result, or if you're going to, whatever it is that's holding you back, fear, anxiety, pride, stubbornness, ego, maybe try something new, maybe learn something new. Um, my way is my way. I can teach people to do this. But you have to be able to really have a different mindset and you have to change the way you think about investing back to protecting capital first. When you look at my entries, what am I really looking at? I'm looking at, hey, I want to be sure that I get in at a price where number one, the trade's still valid, but my risk is not too high for the amount of money that I think I can make. It's all about protect capital. So I'd like to start something new this week, which is if you have a question, especially if you're a Discord member, and you'd like me to cover it on a weekend update, please feel free to ask. I'll choose the best one. So this question comes from Blue Side Up, and he or she asks, speaking of options, can you all, or maybe the boss, share some knowledge on finding good option prices or good deals? What makes an option expensive versus knowing when you found a good price on a strike? Is there a method to that madness? Thank you. Yeah. So first of all, I think it's important to understand the difference between what is an option contract and what is a stock. So a stock represents actual ownership in a company. You have one whatever of the outstanding shares, 100 million shares, let's say. You own 1/100 million% of that company. So you are due its earnings and all of that. And uh, so you have ownership. Whereas an option is actually not an ownership. It's actually it's a contract. And then, as with any contract, it has an end date to it, which is its expiration. It has an execution price, which is its strike date. And then it also has, for the price of the value of the contract itself, it has a premium cost. And there's other Greeks obviously involved to come up with that cost. But what's important is when you look at a stock and an option, it's not about looking at a good bargain or a good value. It's important to look at each of them for what they are. They're merely investment or trading vehicles. So they are vehicles that express the value of an asset, or it is a derived value, like in an option, a derivative, okay? And it's expressing that value. So I would encourage, to answer your question, blue side up, if you're looking at an option contract and you're wondering whether it's cheap or not, well, here's my rule of thumb. I look at the price of the strike. So let's say for this one on PPTA, okay? Let's say I'm coming in here and I'm saying, I want to look at look at the ones I bought. I bought these for $1.35, $15. I take the price that I buy, okay, 135 divided by the strike. And when that's greater than 10%, I know, and this works with at the money now, okay? Slightly out of the money or at the money, which means you want to get a strike price right here, very close to the current underlying price right here. So when I see it's over 10%, what that tells me is it is expensive on average to the tens of thousands of option prices I've looked at. 10% is about the right range. That when you get above that, when this ratio is above 10%, you're probably paying up for it probably because there's a lot of demand for it. It's moving up strongly. Here we go, 110. Okay. 10% of that is $11. Not very expensive. Look at Tesla. Watch this. And this was happening with an NVIDIA too. So I've got Tesla. Let's look at the money. So 313s, 315s. Cheap. 2122. Let's look at Meta. At the money is, my gosh, I should have not used my cursor, huh? 720s, 33. Very, very cheap. Let's look at NVX. Oops. NVX. $15, $1.45. Pretty cheap. So you can see they're all around that 10% or less. So that's the first thing. If you're asking the question in terms of evaluation, like how do I know when that option contract is cheap relatively? Very difficult to do because unlike a stock price, which its only input variable is the price itself, an option contract has three different input values. It has the stock price itself, it has the time to expiration, and it has the implied volatility. So with three variables, it's very difficult without understanding the structure of the option and how an option represents a stock price movement. It's very difficult to decide whether it's pricey or not. I would encourage you, instead of looking at option contracts in a manner of is it pricey or not, find a company that you like, right? Let's say it's you're interested in IBM, let's say. I don't know why you would, but let's say you are. Great. Find a company you like, then go out 2 months. So today, go out to September. If there aren't any Septembers, go out to August. Okay. But go out a month or two. Look at the option price relative to where it closed. So let's pull up IBM. It closed at 283, 1165. That's less than 5%. That's a cheap option, right? Start there. Then your next step would be coming to your daily chart and saying, hey, where do I think I'd want to go long? Well, I'll tell you where I'd go long, right up here, right? Where would I go short? Probably down here. Yes. All right, long, short there, long there. There we go. Okay, I just did my what I call my one up and one down. So until it breaks one of these levels, I've got nothing to do. But when it does, I'll be ready to go back and look at these options. Works the same thing on the put side. Okay, that's how I would do that. And then finally, Mr. or Mrs. Blue Side Up, when you get to that, okay, point, DM me and I'll help you construct a trade. So and we'll see if it works or not. But anyway, I hope that helps. It is not as easy with an option in terms of, well, what makes it expensive or what makes it cheap. I think it's important to really understand how an option is constructed. I just shared that with you, the mathematical variables that actually go in as the input values. And that will give you a better idea of at least where to start. But absolute valuation, using an option price for absolute valuation is going to be extremely difficult due to the fact that it's a derivative. And as you get further away from the source data, it is that object becomes less representative of the source data. So, okay, I hope everyone has a fantastic weekend. I know I'm going to have a fantastic weekend. So thank you very much for listening. Send me any questions that you might have. And if I get enough or some good ones, I will review them on a weekend update. In terms of podcasts coming up, yeah, I'm talked to Mr. Reyes, and we're going to wait till earnings come out on both EOSE and ENVX, and then we're going to go ahead and do a podcast for that. Just fantastic performance. I am up 35, whatever, percent for the year, 34.82. And the overall portfolio cumulative return since May 15th of 2023 is 369% cumulative return. And that's on average risking about 40% of my portfolio maximum at any one time. So I hope everyone has a great weekend, and I will talk to you next week.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coattails of the next man. Passport in my left hand, thinking that you are next. Heck, oh, you ain't holding your breath, man, cause I'm out here, I'm hungry. I don't play around, trust me. Ain't had as much drive since my Honda Civic got rusty, and my girl said that she loved me. It's funny, just thinking back, study hard for that 9 to 5 like I thought it actually be good with that. It was